Hello and welcome to Marco on Markets. This channel is for educational purposes only and shares my personal opinions and investment process. Nothing in this video should be taken as financial product advice or a recommendation to buy or sell any investment. Always do your own research and consider obtaining advice from a licensed financial advisor before making any investment decisions. Good morning. It's 9:51 on the 26th of August. 2026 market's about to open. My name's Marco. Hope you're having a good day. So this morning we're expecting the market to open up higher by around 0.33%. The overseas market or the US market overnight was S&P 500 up 0.32%, the Dow Jones up 0.3%, and NASDAQ up 0.66%. Today I'm going to cover Woolworths. Woolworths have released their figures today. Apologies, yesterday I did say while I was covering Coles that Woolworths had released figures, but I actually misread some information they actually released today. And I'll just share. Today's a very busy day on the market of announcements. So we've got Woolworths releasing their full year results, Worley, WiseTech Global, Tabcorp, Lovisa, Netwealth, Paladin Energy, Nine Entertainment, Kelly Partners Group, Counts Limited, Retail Food Group, and HMC Capital. Some of those are just full results, some are just presentations, dividends, so a busy day ahead. So I'm going to cover Woolworths just because it's one that's close to my heart. It's one that I do trade. I don't have any at the moment. And I do like supermarkets, mainly because they are fairly recession-proof. People will need to eat food from till the end of time, and they might cut back on a steak, perhaps if they're under cost of living pressure, but they might still purchase, say, a mince or some other product. So, and as I mentioned yesterday, I think the latest research shows that people are shopping 2.7 times per week. They're either going to go to Coles, LD, Woolworths, or an independent like IGA, Friendly Grocer, Drake's, Foodworks, those sorts of ones. But yeah, people will always need to eat. And Woolworths and Coles, they currently have around 30% each of the total share. I might just get the latest data on that because I'm just going off my memory. Coles and Woolworths market share, and just see what's available on the internet. So actually Woolworths has 38%, so I misspoke. I was close with Coles. I said 30%, and I did say 30% for Woolworths, but Woolworths actually bigger, has 38%. Coles 29%, LD 9%, Metcash and Independents 7%, and others 17%. So I did say 10% for LD, which was pretty close, 30% for Coles, which was actually 29%. So there you go. That's interesting. So it's a bigger player, but as we will cover off in the presentation now, you'll see why. So this is the announcement that I've downloaded this morning. So if you're ever wondering where to get these from, you can go to the Woolworths website, go to the investor tab, and you'll be able to locate, or if you have a broking account, go into the stock code WOW. Or you don't have to do the .ASX. So just type in Woolworths, type in WOW, go to news and announcements. Under the ASX announcements, you'll see a series of reports that were uploaded this morning at 8:30, so around an hour and a half ago. There's a full version, full results, which will be like 174 pages, or there'll be an investor presentation, a results presentation, which is still quite large today. That's 40 pages. So I'm going to go through that now. So let's go to, so there's a little letter there from the investor relations person, Paul Van Meurs, to the ASX releasing this document, and it's for 52 weeks ending 28th of June. So pretty much last financial year. A lot of retailers operate on this retail calendar where they do everything in weeks. So that when they're comparing a year to another year, that and also the quarters, that they all line up nicely. So we've got here summary. Okay, so Woolworths is one of Australia and New Zealand's largest retail businesses. It operates supermarkets, discount department stores, food wholesale operations, e-commerce platforms, loyalty programs, financial services, insurance, and media business. Its core brands include Woolworths, Big W, Woolworths New Zealand, PDF Food Services, and Everyday Rewards. The company serves millions of customers each week through a network of physical stores and digital channels, and with a growing investment in online grocery, AI-powered shopping tools, supply chain automation, and customer loyalty programs. Management strategy is focused on being the first choice for customers, improving returns in New Zealand and Big W, and growing complementary businesses such as Cartology, Everyday Rewards, Insurance Mobile, and Primary Connect Logistics. So let's go to page 5. Okay, so we've got here the group earnings before interest and tax has increased by 12.7% based on from financial year 25 to $3.1 billion. Yeah, that's correct. So they've listed as 3,105 million. So yeah, 3.1 billion, while net profit after tax increased by 15.4%. With every trading segment contributing to earnings growth, this represents a significant recovery after recent supply chain and industrial disruption issues. So yeah, I did mention in the Coles presentation that they did have a strike, industrial action in Woolworths, and that had a positive impact on Coles actually. So I can't remember how long they were out of action. I'm going to say 2 weeks to maybe 3 weeks. It could have been less, but I'd have to look up those dates and see what it was. But basically, their distribution centre went out on strike, so there was a shortage of some products in some stores. And yeah, I was saying yesterday that Coles actually mentioned it in their figures that it had a positive impact on their sales. Yeah, so there's the net profit after tax increased. So the net profit after tax, let me find it here. Net cash flows. It's the one that I like, the figure I like the most, because I know they focus on before tax and before interest and before, depreciation and this and that. But at the end of the day, they have to pay tax and then there's money left over. And that's I believe it's the true profit. Do you know what I mean? After everything is all said and done. So the net profit after tax was $1.9 billion. So I think Coles yesterday had, let me just find it here, profit after tax. Sorry, I'll just find the table. Tax paid. That's cash flow. It must be in the full report. But yeah, it's approximately $1.95 billion. Okay, let's have a look at page 4. So we've got group e-commerce grew 15.9% with strong growth in on-demand grocery delivery. Woolworths has now more than 850 stores offering on-demand services, and over 70% of online orders are placed via the app. So that's a growing part of the business. We saw yesterday with Coles, they said that, was it around 9%? 9% of their turnover of their sales was online. So we've got here, let me just see if I can find a similar figure. So they've got 15.9% growth, sales growth in e-commerce. I'll see if they've got the numbers here. 7. Yeah, I can't see that comparable number. The next one we've got is 17. Big W. So Big W delivered a notable turnaround, returning a profit, EBITDA, and cash flow with e-commerce GTV growth of 26.7% and a market growth exceeding 83%. So they've really increased that business somewhat, and it's making a profit now. So I'm not across exactly what it's done in the past, whether it must have been a loss-making part of their business. So, okay. They talk about on page 7 here that Woolworths noted that ongoing cost of living challenges with their customers, with 41% of their customers reporting that they are struggling to make ends meet, and 67% are shopping across multiple supermarket chains, highlighting the competitive environment. So that's interesting. So that 2/3 of their people shop at more than one supermarket. Some people are loyal to their supermarket and some are not. I think the loyalty programs help people to shop at the same store. Also, your geographic location. So if you lived, I don't know, 200 meters away from Woolworths, I'm sure that most people would just shop there all the time rather than drive, kilometers away to go to a Coles. I can see it with Aldi because Aldi is cheaper than Woolworths and Coles. They also talk about and this is interesting because I haven't heard much about this in the media, that management expects elevated wage growth in FY27, including impacts on changes from the 18 and 19-year-old retail employees. Combined with ongoing cost inflation, this could pressure margins, and unless it's offset by productivity gains. So what they're talking about here is, in the recent Fair Work hand down, is that they're going to, I'll bring up a little chart here. So they're going to cut junior rates 18 and 19 with less than 20, with less than 6 months of experience. So currently this table here on the left hand side, this column here is what a lot of awards are paying on. So, and this percentage is of adult wage. So if you're a 16-year-old, you get 50% of the adult base rate. And if you're a 17, you get 60%. 18, you get 70%. 19, you get 80%. When you're 20, if you've done less than six months of experience, so pretend that's your first job, you get 90% until you hit the 6-month mark. And then if you've done 20, if you're 20 years old and 6 months experience, then you get the full adult rate. So what the Fair Work are bringing in is they're cutting out so if you're 18 with 6 months of experience, you get 100% adult wage instead of 70. And similarly with a 19-year-old, and for 20, it remains unchanged. So if you've got, say, let's say a 16-year-old starts with Woolworths or any other retail outlet, that is, or fast food chain, they'll be on 50%. Then they turn 17, they'll be on 60%. But when they turn 18, because they've already had 6 months of experience in that example, instead of going to 70%, 80%, they go straight to 100%. That's going to have a significant wage increase on the employers that employ younger people. So think of supermarkets, think of McDonald's, KFC, anywhere where there's young students or young people having a little weekend job. This will impact their wage bill. And so what does a store do? Does it just wear it, or does it pass it on? And a lot of us would like to think, yeah, they'll just wear it, but they don't. They just pass that cost on. And unfortunately, we'll see from December 1, 2026, we'll see a significant wage increase to those younger people. And in turn, the costs will have to be passed on. So I believe that there will be a significant increase in prices. It won't be going up by 30%, but you'll see that prices will increase generally especially like fast food outlets and supermarkets. They'll increase them. I mean, you won't notice it as much at a supermarket because they could put up prices, say, by 0.5%, and you're not going to notice that too much. That's like 50 cents in a $100 shop. But when you go to McDonald's and get your combo for, I don't know, $15, and next time you go it might be $16, and you might notice it there. So anyway, that's interesting that they've flagged that there's that's going to put pressure on their expenses, and not to mention just inflation in general. So but they are smart operators. They'll pass it on, and the consumer always ends up paying for that. So currently, Woolworths have around 200,000 employees, direct employees. across Australia and New Zealand. So that's they're a very large employer and play a significant part in employing people in Australia. So every time people say, "Oh, don't shop at Coles or Woolworths," just remember that they are employing, Woolworths 200,000 and Coles yesterday. Actually, I'll make a correction. I believe I said 115 employees. That was 115,000 employees. So between the two of them, that's 315,000 direct employees. And so that's a significant amount. And Woolworths also have paid $728 million in tax, which goes to supporting, obviously, all our government services and infrastructure, roads, hospitals, education, defence, social payments, etc., etc. So I do like Woolworths as a business. So and yeah, so they turn over, what was it, $3 billion, and then they made a profit of $1.9 billion. Sorry, I didn't. Oh, the gross turnover was 71, and you know how I like to get that figure. So it was 1.95 billion, 1.59 billion net profit after tax, and it was 71.5 billion dollars in turnover. So 2.7, that's very consistent with, I think Coles was exactly 2.7 as well. So these businesses turn over a lot of money and have a very small margin, net profit after tax margin, 2.7%. So exactly the same as yesterday. You spend $100 at Woolworths, and then the store will keep $2.70 out of that $100 after it's paid wages, rent, for the products that you've purchased, head office staff, marketing. And yeah, I did actually just want to say that Woolworths has quite a large range of services. So, they've branched into, mobile and insurance, and they've got that everyday rewards program. And I know from personal experience that with our healthcare, private health insurance, they've got like a program with them where, once a month you get a 10% off your shop. So they're really branching out. With the insurance, they will have teamed up with, a major insurance company, and they'll white label that insurance. So it's the Woolworths brand, but in the background, whichever insurance company it is running those. And similarly with mobile, they will have teamed up with one of the major telecommunication providers and white labeled their Woolworths brand on top of that. But in the background, it'll be Telstra or Optus or whoever they've got in the background running that. So let's finish the presentation there. I'll just jump back in online. I've been logged out. So let's see how the market opened. So coming back to expectation was ASX 200 was expected to be up 0.33%. The market has opened up at 0.29% higher, which is pretty much in line with expectation. Let's go to Woolworths and see how that was received. With Coles yesterday, it did open up flat, then it dropped by 1%, and then by day end, it ended up I think around 4% higher. So Woolworths has been received very well, 4.2% higher. So yeah, well done. Let's see how that holds. So I mentioned yesterday that sometimes on the back of this is coming back to my Coles position that I have. The market close was around 23.69 yesterday. The average, so my target price is $24.52. So I needed it to increase another 3.5% or 83 cents in order to reach my target of $24.52. So sometimes when one retailer or one company releases their figures, that another company of similar in the same category, so in this case Coles and Woolworths, sometimes it also increases. So I'm just gonna flick straight to Coles and see how they're going today. They did have an increase of 4% yesterday, so they're still on track. They've held that and they've put on another 1% today. So people are loving on the supermarkets at the moment, and my target's $24.52, and it has been as high as $24.30 today. So I've got a position on, if we go to depth, $24.52. If we go to $24.52, you'll see an orange one there. So I'm in that bundle there, and hopefully we get to that today. I'm not 100% sure if we will. It's still another, let's update my spreadsheet because it'll do the calculation for me. Market price. Okay, so it's currently 0.03% higher than what I paid for it. So we're only just crossing my purchase price now. So we've really got another 2 to go. I don't think that's very realistic, but you know, sometimes people love on the releases, and Woolworths has had a good day. So anyway, we'll just wait and see. It did get closer this morning, so we'll just have to watch that. Let's have a look at the ASX 200 and see who the leaders and the losers are today. We've got Worley. All right, that's what I did make. Let's push these out, and then what I did, I gave you that list earlier of the companies that were releasing today. And I did this morning just make a quick list because I'm always interested in reporting day and how the companies that are reporting perform. So here's a list of that list I read out earlier of all the companies that were reporting today and the movement this morning, which is live. So Worley was on that list. They reporting today and was not well received, 11.5% down. WiseTech Global, that's down 8.18% on the back of their earnings today. And then on the positive side, we've got Lovisa, which is interesting. That's a retailer up 16%. That's pretty huge. HMC, I think that was HMC Capital. It's not one that I'm familiar with. They're up 10.9%. So it'll be interesting to see how they end up today. Woolworths is in there, 4.25% now higher. And while I've got that in my head, if you're a dividend shopper, they do go ex-dividend. I did download that as well. So they go ex-dividend. They're going to pay a 52-cent dividend. They go ex-dividend on the 1st of September 2026. So you need to own that share on the 31st of August, which is in about 3 or 4 days. Yep, it's 5 days. Sorry, I can't do maths. And then you will get that 52-cent dividend. The price will drop the following day, but what I do notice is within a week or two, or even a month, sometimes the dividend's forgotten about, and it's back to the normal share price. So, all right, let's have a look at the gainers. So we've got Worley, who do construction and engineering. They're down 11.6%. WiseTech Global, as I mentioned, down 8%. They've got a very volatile stock price. Look, they've been in and out of the news for many different reasons, and it is one that I've watched quite closely. I've never invested in that, but they do logistics and global trade and supply chain. So basically, if you purchase something online, they might be using WiseTech Global to track that item all the way through from the warehouse to the consumer's address, through every airport and every distribution point. So it's a very sticky product. So I believe the actual product itself is quite good and probably has a good long-term future, but it just has some governance and issues behind the scenes going on. I'll let you do your own research on that one. Drone Shield down 7.95%. That's interesting. They were up like 6% yesterday. I believe it was just on the back of what was the other company? The name escapes me, but yeah, there was another company yesterday that had earnings release. Let me just find it quickly. And one moment. Sorry about this, but if I don't do it straight away, I'll forget. And then, but yeah, there was another drone company that released yesterday, and they had a significant EOS. They had a significant gain. They were up like 22%. So this one here, electro-optic systems. So they held. So they were up 22% yesterday, and then they've held that gain. So nice. But Drone Shield, I believe, yesterday pardon me, it had no announcements. However, it did increase somewhat, unless they've released today. So I've forgotten my right, they've released today. Okay, we'll have to have a look at those. I should have remembered that was on the list, but yeah, they've released today. So the market's not really happy with their reporting, down 7.69%. It's a very volatile stock, that one. Flight Centre also down 7.9%. And Xero's accounting software, it's down 4.87%. So bit of a tech theme going on as well. Travel down, a mixed bag. I don't believe they've done any earnings release, but it's had a very nice climb in the last sort of 2 or 3 weeks. Xero has. It's one that I used to trade, but I don't trade it anymore because they don't offer a dividend at the moment. So my new policy is that any share that I do trade needs to pay a dividend, and that's just because of this Xero experience. I'll go through that. So in the last since roughly a month and a week or so, yeah, they've put on 38%. So they've had a really nice climb. But yeah, with the Xero, my Xero story was that I purchased it many years ago, and I got stuck with it for around 2.5 years or so. So probably from about, so COVID was here, it had the increase, and then yeah, from about this $140 mark, somewhere from around there to around there. Don't quote me exactly, I'd have to pull out the dates, but in the end I got my money back, and I made a small profit. I was just happy really to be out of it. I did go on to miss quite a significant uptick. It went up to, I think I sold it in the 140 mark somewhere, 145, 148, and it went on to go up to like 180 odd dollars. I'd left a lot of money on the table, but I was just relieved because from here, from when I purchased it um, to the low, it was at round about 40%, 45%. I must have purchased it in here somewhere. But anyway, I was down around 45%, and that was quite, I was okay. I was okay, but it was quite a stressful time to be down so much money. And yeah, and at the time I was trading one stock at a time. So that was my only position. I didn't have anything else going on. So anyway, I sat it out. I just waited, and it took around 2.5 years to get back from the time I purchased it, and I left with a profit. I mean, it wasn't a true profit really because of the opportunity cost. I could have had those funds in offset accounts and been well ahead. But anyway, one of my war scars. So on the positive side, we've got PDI gold up 375%. That's huge. They do gold, so they must have struck gold. Wow. So let's have a look at the announcements. Name change, constitution. Right. There's no news, no announcements there. There's no news for this stock. There's a constitution release. I'm not 100% sure what's going to be in that document. So they're releasing their constitution. I'm really not sure what's in that document that's causing this share price to increase by so much. So I'll just leave. I'll skip on that one. Lovisa, that's a retailer. They do like jewelry and apparel and that sort of stuff. So up 16%. They did have earnings release that was on that list. So I might have a look at that later today. We'll see how we go for time. Wednesday's a busy day for me. Perseus Mining, they do gold up 8.9%. Sandfire Resources, their specialty mining and metals, they're up 7%. And Alkane Resources, they do gold also, they're up 5%. So definitely a gold and metals theme up on the positive side. Let's go to my virtual portfolio now. So these are my real holdings, but just the amounts are different. So we've got CBA up 0.13%, so pretty flat. Accent Group is down 2% today, so that's not great. Westpac, it's making a little gain today, 0.4%, and Coles up another 1%. So that's very welcomed. And finally, we're back in the positive with Coles, only just, but that's okay. So look, if they have some like good trading in the next couple of days or weeks, that position probably will exit, I'd say, within the next maybe 2 weeks. We'll just see. I'm sure there'll be a negative news story on Coles and Woolworths tonight because Coles have taken out 1.2 billion and 1.9 for Woolworths, so that's $3 billion. So there'll be some negative press around that, even though they employ 300,000 people, and between the two of them, pay nearly $1 billion in tax to the government. So On that note, I'm going to leave it there. I think I covered everything I wanted to. I did have the market index. This was interesting. I like watching this. Thanks to Market Index for putting this on. It's just a free resource that's available from their website. They've got this index here. I was just looking at it earlier today, and it shows you which sectors are going up and which sectors are going down. And definitely, if you click through, you can see like go from a month to a week to a day, and you can really see what's starting to come back and what's like the financials, for example, are starting to be in the positive, down 2%, and then definitely on the nose, but starting to get back to a positive. So, and if you watch them over time, you can see how they move around. So we had healthcare was definitely big, and then it looks like it's starting to retreat and almost, heading towards the negative. So, momentum and sentiment in each sector changes over time. On that note, I'll call it a day. Have a great day. I'll see you on the next video. Thanks for supporting the channel.